Welcome to another Straight Up Tuesday tip. I'm 𝗤𝗁𝗀𝗀𝗃. With me as always is Mark Ainley, and with us again, Josh Steigelmann from State Farm. Josh, how we doing?
Doing great, Tom. How about you?
I am well, even though that intro took me a while. I'm not used to doing it in person.
Yeah, you're like,
Jim
you're
Psyched, man.
Yeah, that's
You're
awesome.
psyched.
All right, so this is a good one. Do's and don'ts during an insurance claims process. For some reason, we have not covered this yet, and there's a ton of valuable information. So let's set the stage. You're an investor. You have a claim, whatever. You have a fire. You have this or that or the other. Just talk us through some of the do's and don'ts, starting with, filing the claim, and walk us through the process.
Yeah. So first thing first, call your agent directly. Don't call corporate. Don't call the claims department. Talk to your agent first. Your agent is your asset. They will help guide you through things directly related to your claim, but they will also be there as a sounding board. Whereas anything you tell corporate, anything you do with the claims department directly, it's all part of the record. They will handle it by the book, whereas your agent is allowed to have a little bit of that discretion and to talk to you about it. All too often, I see customers and insureds call a claims department just because they have a question about a potential claim. And that claim department has to then file a claim. They get a claim started and ends up paying nothing. Not a single penny gets paid off to the customer.
And you have a claim on record.
You now have a claim on your record. Your premiums go up. You are harder to insure by other companies if you want to switch. All of that could have been avoided if you had just called and talked to your agent and asked them the question as opposed to asking the claim department. That's a big, big key.
Is the main question there just, should I file the claim?
That is one of the main questions, yes. And there's a lot to look at with whether you should or should not file a claim. Obviously, the biggest question is how much damage is there? If you have, say you have a $2,500 deductible, pretty common deductible out there. If you have a broken window because a neighborhood kid threw a rock through it, it's like that's insurance is for catastrophe losses. It's not for little maintenance issues or minor things. It's for, hey, my roof just got totaled or my house just went up in flames. That's an insurance claim. But small little, I got a little ding here or this isn't working just quite right, that's not an insurance claim. So that is one of the main things to look at is, A, is it claim worthy? Is the payout going to be more than deductible? It's got to, at a very minimum, meet deductible. But then on the other side of it, you have to look at how is this going to affect my policy in the future? Again, you have a $2,500 deductible. Say you do actually have hail damage to your roof. Illinois was, a little known fact, Illinois was number 2 in the entire United States in wind and hail damage for 2024 and 2023. 2024 alone paid out over $4 billion here in the state of Illinois for wind and hail damage.
Dude, that's insane.
It's insane. No one thinks about that. Everyone thinks about...
And that just pissed me off because that's why is that why our premiums are going up?
That's why you're seeing premiums go up. But everyone thinks about the wildfire out in California, the hurricanes down in the southeast. Those are bad. Don't get me wrong, they happen. But 11 of the last $15 billion catastrophe claims right here in the Midwest. It's all wind and hail damage. So going back to that illustration, say you have wind and hail damage, comes out to $3,000. Now, that's not going to be a replacement of a roof. That's just you've got some shingles missing. You're repairing your roof from this. You have a $2,500 deductible. Could you file a claim for that? Yeah, you definitely could file a claim for that. You're going to get $500 in payout. Chances are your premium's going to go up over the next few years more than $500 because of that claim. So right there, you're at a negative for filing that claim, even though technically you could. And we're not going to stop you from filing a claim if you determine that you want to do it, but that's going to be something that we're going to advise on. But even more so on investment properties, apartment policies, those are under incredible scrutiny right now with underwriting. Most companies, if you have a single claim in a 3-year period, won't touch you. So if you have a claim like that, and apartments normally have bigger deductibles, but if you have a claim like that where it's only giving you a very minimal payout, it's not really netting you any type of profit, don't file a claim for that. You're not seeing the financial benefit from it.
Yep. I want to take us off topic real quick. It's kind of tangent. we all have a bunch of different LLCs, right? Like you don't have the same LLC for every building. So
Right.
in that situation, you file a claim under, 123 Main Street LLC. Does my other property at 456 State Street, like, do they know because I'm the same person, even though those are different LLCs? Like, does it affect just that building, or is it also like this global view of 𝗵𝗁𝗃𝗀𝘁?
So it used to not have any effect on it, but insurance companies are getting smart about that. So I would say it's still not presently affecting, but it's very possible in the future that it could affect in the future. Right now, if you have a claim on 123 Main Street, even if it's all underneath one LLC, it should really only affect 123 Main Street. If you go to move 456, East Street, your claim record might show that claim, but it'll be associated to 123 Main, and that underwriting department should be able to differentiate between the two. But that's still underneath one. If it's under one LLC or one entity, it's going to show up on your record. If it's under separate LLCs or separate entities, it should be separated. But again, insurance companies are kind of growing wise to that. So that might be something in the future. It might not be effective for the insurance part.
Got it. All right, so going back to the claims process, let's say you do have a legit claim. You have a fire. You have 25 grand worth of damage or whatever it is. Like, it's a true claim.
Right.
All right, so yes, file the claim. Then what? Like, do you need to get an adjuster in there on your behalf? Like, what's typical?
So first things first, start documenting everything. I've seen all too many times where a customer will have a claim and they'll start the process, and then say like I just had one not that long ago. It was a burst pipe in a kitchen. It's a covered loss, and they filed the claim. Adjuster couldn't get out to them for a week because of how busy claims was. They brought in contractor, and the contractor just started doing the work. And by the time the adjuster got out there, all of the damage was gone. So the adjuster's having to go, well, I see, a remodel here, but there's no signs of a burst pipe. And thankfully, that customer kept the evidence. They kept the burst pipe. They had photos. So we were able to prove, yes, this is a covered loss. But I've seen all too many times where people don't keep that documentation. So, you want to immediately, of course, hey, you got a burst pipe or you got a fire, something's going on. You want to try to minimize the damage right away, of course. But you want to document, keep your evidence to be able to prove that this is a claim. Now, a fire is pretty easy to tell. This is, there was a fire in here. So that one's a pretty easy one to deal with. But the first things first is have your documentation, have your evidence, because you need that evidence to back you up. You want it on your side. Second thing is get in contact with your adjuster as soon as possible. Typically, once you file the claim, most adjusters are supposed to reach out to you within 48 to 72 hours. It's kind of an industry standard. But depending on how busy the adjusters are, it's ebbs and flows. We had the wildfire out in California. All the time frames got pushed back because all the adjusters were spread thin. So you want to get in touch with your adjuster as soon as possible. Find out what they want from you, how they can come and meet with you, work with them. You want your adjuster to be your friend. You want them to be your ally. You don't want to make enemies with your adjuster because, it's a whole lot easier to get things done if the adjuster likes you. But if you're just constantly badgering them and being a pain on their side, not listening to what they tell you to do, you'll still get through the process, but you're making it that much more difficult on them. It might not be as easy to get what you want out of it.
Yep. All right, and then what about like you have something big like that? You need to get tenants out of the building, right? It's not habitable for the next week, 2 weeks, whatever. You need to put them up in a hotel. You don't have your money back. You don't know what's covered or not. Like talk about like that limbo state of like.
So that limbo state, it's a very tough call. Most policies will cover that loss of rents once the claim's approved, but obviously during that stretch from the fire happened to the actual claim being approved, it depends on every single claim. Some it's really, really quick. Some it could drag out a little bit. In that limbo stage, see what your agency can do for you. There are certain things that agents with certain companies, like with State Farm, I have certain authorizations to write out checks immediately saying, hey, this is to help cover that additional living expense for your tenants, because we know it's a covered loss. The adjuster just hasn't been able to get to it yet. We can help with that. And there are different expenses like that that sometimes can be addressed right away. If it's also a uninhabitable property, make sure when you file that claim, you know how the claims team knows how severe that is. When they receive a claim, they try to triage it. Basically, they try to determine how severe your claim is. Someone with a ripped up roof and the house is still habitable, it's a claim. They're going to get to it, but it's nowhere near as severe as my house just burned down to the ground or my property is gone. I don't know where I'm going to sleep tonight. Well, we need to get you somewhere fast. So that claim gets to jump the line basically and gets addressed right away. But if you don't bring that up right at the front, they don't know to move it to the front. So that's the other thing when filing a claim. If it's severe, let them know it's a severe claim. Don't downplay it. Tell them like, hey, we had a fire. It was bad. We can't live in there. We need somewhere to live. And they will jump it to the front of the line.
Yep. What else during that process? Anything like, hey, make sure you do this, XYZ that we haven't talked about yet?
Start running a list of what was damaged or what's missing. You would be surprised at how much stuff, especially on your own personal residence, how much stuff you have that you forget that you have. As humans, we tend to collect, and you never notice it more than when you move or when you have an insurance claim, and you go, oh yeah, I forgot that I had my prom suit or all these other things that are still collecting dust in the basement or in your back closet. Have your tenants start doing that as well. They should have renter's insurance to cover their personal belongings, but have them start, hey, document whatever it was. So Excel spreadsheets, the easiest way to go on that. Just here's what it is and what would it cost to replace it.
Yep.
Lost rents. Is that typically something that's an add-on? Because I know not everyone always has that type of coverage.
It depends on the company. So we include it in all of our policies.
Okay.
We even include it in our standard homeowners policy for personal residents. We automatically include 12 months of lost rents for all of our policies. You can sometimes adjust that to 18 or 24 months, but not every company has that as a part of their policy. So when discussing that with your insurance agent, make sure, especially for those landlord policies, that lost rent is a covered thing. Because most of the time, once there's a claim like that, a lot of leases have the ability for the tenant to get out in the event of a catastrophe, but your mortgage doesn't go away on that property just because your house burned down. So you need that supplemental income still. So make sure that that's on there.
We had a scenario recently at GC where somebody, it was uninhabitable. I believe it was around frozen pipes, and they had to go get a hotel. And this owner paid the bill for the hotel, thinking he had lost rents on it. And ultimately, he was out. But what he learned at the end of the process was, yes, he didn't have lost rents, and he's going to go add that actually. But he should have had the tenants place that on their renter's insurance, because that would typically cover it. Is that correct?
Well, like if they have renter's insurance and say there's a claim, the tenant themselves will normally then have loss of use, where they can go get put up at a hotel or a similar living location during that time frame.
We actually use that story with our tenants, because tenants are always like, it's a pain in the butt when we're bothering them to provide a proof of your insurance. But we shared that case study and how it was actually easier to get a bunch of that from them.
Oh yeah, no, and honestly, it seems like it'll be a hassle to get renter's insurance. But renter's insurance is one of the easiest policies to get.
It's fairly cheap. What's the average?
Inexpensive.
What's the annual for a condo, I guess?
Well, for industry or State Farm?
Well, we'll go State Farm.
State Farm average $100 a year.
I'm saying that's probably less than industry, right?
It's less than industry.
Yeah. So yeah, $10 a month. Like
Yeah,
$10 a month. And if you work it right, talk to your State Farm agent. There's this little thing that State Farm likes to do called bundling. If you bundle, you get discounts. I kid you not, we have plenty of customers who end up actually paying nothing for the renter's insurance when they do their auto insurance because the discounts cancel out the cost of the renter's insurance.
What are any other mistakes that you see, and maybe you have a story of investors make when they go to make a claim or try to make a claim?
Biggest mistake I see is they trust storm chasers. If a guy comes and knocks on your door and says, hey, you got damage, I can get you a brand new roof. Kick him out immediately. Do not talk to that guy. Talk to someone you know and trust. That guy is just simply trying to get you to sign on the dotted line. Most of those contracts are very, very perfectly worded to where you still have to pay for stuff, even if insurance doesn't pay for anything. So I kid you not, I've had customers who had a storm chaser go up on their roof with a hammer and start wailing on their roof to then come and knock on their door and say, hey, you've got hail damage. No, you don't. You got hammer damage. And actually, in this case, that's vandalism. You should press charges against that person. But get rid of storm chasers. Do not trust them. Most insurance agents, including myself, we have people that we know and trust. We're not affiliated with them in any way other than we recommend them to customers. We don't get any kickbacks. We're not allowed to get kickbacks. But these are people we know and trust, contractors that deal with insurance. The other thing is, if you know a contractor you know and trust, make sure they know how to deal with insurance. I've seen plenty of contractors who do great work. Some of the best quality work are horrible for insurance claims because they don't know how to fill out the paperwork or how to make it presented to the adjuster in a way that makes sense. The amount of times I've seen a roofer send in an invoice where it says, brand new roof, $20,000. And it's like, no, we need a detailed invoice. And they'll go, labor $8,000, material $12,000.
We'll use shingles.
No, yeah, no. Like, you don't understand. And that contractor, God bless his heart, does great work. Like, the actual work he does is phenomenal. But he's terrible for an insurance claim. You're going to bang your head against the wall as the insured because the guy he doesn't deal with insurance. He doesn't know how to present the documentation. He doesn't know what documentation they need. So make sure you're dealing with somebody who knows how to deal with insurance claims. And there are plenty of people out there who do great work and deal with insurance.
Every so often we'll take on an owner and we'll inherit a tenant, and maybe he even inherited that tenant too, but tenant will go to move out and the place is just destroyed. And it might be due to just lack of updating, or it might be the tenant did something. Is there ever a time, now those are the owners that are saying, hey, I can't file an insurance claim. Is there ever a time when a tenant moves out and there's actually an opportunity to file an insurance claim?
Oh yeah, I've seen that. One of my customers not that long ago just dealt with a real messy situation with that, where the guy actually intentionally damaged everything on the way out, left the bath running, left all the sinks running, punched holes in the wall, spray painted the floor. So the guy straight vandalized the entire place. Filed a claim. We, as a company, went after that individual. And he also got charged for vandalism. And I don't know what the outcome of that case was, but that's a very clear-cut case of, okay, you need to file a claim for this. But you can also have tenants who mean no direct harm, but they're just negligent. I mean, at the end of the day, tenants don't take care of the property as well as the owner. It's just a fact. But you'll have somebody who's just, that's been like that for forever, or I don't know what to do with it, and they maybe didn't even want to bother you with it. So you got to find the root of what the problem is. Hey, we got some mold over there in the corner. Well, what's that mold coming from? Because mold in and of itself is not a covered insurance claim. But if that mold is there from, say, the roof has holes in it from a hail claim, well, we can get the roof fixed. We can replace the mold. But we got to find the root cause first. So best advice on that is, if that happens, call your insurance agent. Talk to them. Every single case is different. So you got to talk to them.
I think that's the biggest takeaway anyone listening here can take is you got a guy, you got your insurance guy. If you don't, I told someone a couple weeks ago, if you don't have that comfort level, we'll refer you to somebody. Like you need to have somebody that you could call up, be honest with, and let them guide 100%. You in the situation.
Yep. Cool. All right. Chicago Fact. Who are we playing for?
All right. Mason Banster. All right. Mason's my son's name.
Mason.
All right, Mason, if myself or Josh gets this question right, you get $50 gift card brought to you by State Farm, Josh Steigelmann Agency.
All right. It's baseball season. And I know you're not a huge baseball guy. You are more of a Sox guy than a Cubs guy, though. What year did 𝗬𝘵𝗶𝗵𝗵 open? So your options are 1989, 1991, 1994, 1997.
First off, I'm probably 50-50. Like, I just always have a Sox hat because it's black and it goes with stuff.
I'm going to be terrible at this. I bleed Cubby blue, so.
I want to say
I know. Here, I'll give you a hint. You can back into it for my age. I know I was in first grade, and my buddy Anthony Rizzo went to opening day, and they got smoked. And I thought it was the coolest thing ever. He was going to the first day of a new stadium.
I think I've got an answer on this one. I could be way off.
I'm pretty sure it's 89.
I'm pretty sure it's 89 also.
No, guys, I'm not that old. 91. 91. I think they played
Mason.
the Tigers. They got smoked like
If you
whatever, 12-0.
if it had been a Wrigley Field question, I would have had you, buddy. I'm
All
sorry,
right,
man.
Mason, sorry about that. But you know what? That stadium, the Sox were actually pretty good back then. But I remember when that stadium was going up. That stadium's like horrible right now. Like it's like one of the worst stadiums in the league that they're saying right now. So I don't know what Ryan Sorv's up to. He's focusing too much on United Center and not enough on Southside there. So. But I'm still waiting for them to move to Addison. That was their plan when I was growing up. But all right. Well, man, Josh, thanks for coming on. Of
course.
Tom, thank you as always. Listeners, we want to hear from you. Let us know what you're working on. Maybe we can help you. Maybe we can share our resources with you. Maybe we're just kind of curious what's going on. Maybe make a good guest. So reach out to us, Instagram, Facebook, LinkedIn, find us, or you go to straightupchicagoinvestor.com and we have a contact Mark and Tom. So we'd love to hear from you, and we'll do what we can to help you on your journey. So Josh, thank you. Tom, thank you. Listeners, we'll see you on Thursday.